Good evening, everyone. I hope everyone is doing fine. We've reached the last chapter of this subject. Let me see how many of you are there. I've just received 2 good evening wishes in return. What about others? Sipping tea or coffee? So how do I get to know that you people are there? Unless and until you revert with a good evening wish. We have crossed 12 chapters of the subject. And now we have come to the last of these classes, this subject, chapter 13. I hope everyone is over there who I met earlier as well during chapter 6. Okay. So let us go with a quick recap. Just a second. Yes. Till the time everyone logs in for 2 to 3 minutes, let us go with a quick recap. Wow. Manish says he's done with what you said, examiner's comments. Yes, I gave you some work that you had to go through those examiners' comments file available on the website. So it's great, Manish, that you have seen that file, and I hope you would have got enough knowledge about how to attempt your exam, what is the nature of the question, how do you need to attempt your exams, and everything. So that file is a gift. Really nice. So what we have done till now, the journey of audit का सफर कैसा रहा अब तक? Chapter 1, nature, objective, and scope of audit. It's all the birth chart of audit, right? What is audit? Auditor's independence, some basic standards. Then we came with audit strategy, audit planning, and audit program. The basic needs, the basic requirements when you go for articleship. Chapter 1 gives you the requisite knowledge. Chapter 2 starts your practical knowledge. With chapter 2, we start with your practical knowledge. Chapter 3, audit documentation and audit evidence, the most important chapters. Risk assessment and internal control, a bit technical chapter, a bit lengthy, and it's usually seen as a difficult chapter by the students, but still it is again an important chapter for you, and it is repeated in CA finals as well. Then a bit lighter chapters, fraud and responsibilities of the auditor in this regard, audit in an automated environment, audit sampling, analytical procedures. This is what basic audit was, right? This is what basic audit was. I'm coming to that. I'm coming to that, Ravi Prasad. I'm coming to that. Now, when you have to apply the knowledge gained from these 8 chapters, everything, you have to apply it in real life situation. To apply it in real life situation, you got some real life situations. What is that? That is in an office or wherever you are auditing the financial statements. There are different heads in profit and loss account, in balance sheet, in various ledgers. So here comes the most important, I would say, milestone chapter, chapter 9, audit of items of financial statements. The Ch-6, the most important chapter, right? And then the company audit, a bit higher. The initial step was audit of items of financial statements, sole proprietorship, partnerships, right? Now, next step, the company audit. Everything related to the Companies Act, the Division 1, Schedule 3, everything. You have to do, how do you prepare an audit report? Then the third step, you come out of the office, the banks. And in the miscellaneous, at last, we have the audit of different types of entities. Different types apart from whatever you have studied. How to apply this knowledge in different, there are different types of entities. Every entity has its different, it could have a different organization, it could have a different structure, different bylaws, different rules. And again, to adjust to those rules, to go with those rules, to go according to those rules, the audit procedures and programs also differ. For this, we need to understand what kind of entity is it, what are the bylaws or rules of that entity, the constitution, the organization, and how do we apply our audit knowledge, whether gained theoretically or practically, to that particular entity. So this is our topic of audit of different types of entities. It is, I would say, if you guys have traveled through trains, so it is a journey of different types of entities where each entity is a different station. Assume yourself to be traveling via train and every entity is a different station. Okay, so number of entities, number of new things to learn, and number of new audit procedures. Not the new audit procedure, whatever you have learned, we are going to apply over here. And a question has been asked, what types of questions are asked from this chapter? So mostly direct questions. Usually not that up to typical case studies, but yes, usually direct questions. And incorrect, correct, yes. You can always go for it. Like the correct, incorrects asked in the exam from this chapter are usually easy, not that hard to crack. So usually direct questions and correct, incorrect are easy. Okay, we'll definitely practice those questions. And even if you can never rule like that a case study cannot be asked from this chapter. So we'll be definitely practicing one or two case studies as well from this chapter, although there are minute chances that you'll be at case studies, but even if 0.1 or 2 or 1% chance is there, we'll definitely practice one or two case studies, right? So let's start with the chapter, audit of different types of entities. Okay. So here we go. So what are the topics we are going to cover in this particular chapter? What are the different entities we are going to cover? Yes. Cooperative society, non-for-profit organizations, NPOs, sole trader, firm, charitable institutions, non-government organizations, educational institutions, hospital, club, cinema, hotel, hire purchase, LLP. Sir, so many entities. How will we able to learn all the points of these entities? This is the most common problem among the students. It's a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 chapter, 13 entities. What do you expect from us? How would we be able to learn all these points pertaining to each and every separate entity, and that too after all those 12 chapters? So we'll do one thing. We'll be reading and we'll be understanding the concept of each entity, and then we shall see the trick or the ways how to learn the points of each and every entity, right? We'll apply the knowledge we have gained from our daily routine whatever we see around us. We'll use that knowledge, we'll use our experience, whether it is 2 years or 3 years or 15 years experience. We have always have the experience of staying in a hotel. We have visited cinema, right? We know what are sole proprietors, business families, sole proprietors, partnership firms. We know about educational institutions. We all have come after reading schools, colleges. We all know what is the working in a hospital. So we'll try to link that to our practical common knowledge. And then you'll see that learning this chapter, the points, basic points, specific points of this chapter would become really easy. Okay, so audit of different entities. I hope everybody has got the notes. Make sure that with this chapter, you are just trying to understand each and every concept and each and every point, right? Whatever I'm doing, making you read over here. The presentation which we have received, which I'll be showing over here, which we'll be using over here, it is itself notes. It is actually notes in itself. So only write down that much of material which you feel that would help you while revising this chapter. Otherwise, no need to jot down anything extra, because whatever is there in the module, it is covered in the presentation itself, and we'll be discussing that as well. Whatever we have to do from the module, right? I'll share the module with you people over here, and we'll read that directly from module. Otherwise, this is a presentation as well as these are the notes in itself. So make sure that you sit back, relax, and just understand the chapter. And don't waste your time in jotting down everything what I'm telling you or whatever is not there in the presentation, right? Each and everything important is there in the presentation. Srishi, can you please check again for me? It is over there. I've uploaded the whole chapter over there for you people. It's not like class wise. I've uploaded the whole chapter. Whatever extra I have to give to you apart from these notes, I'll be uploading in due course of time over the period of these 3 classes. But as far as this presentation is concerned and some of the practice questions, I've already uploaded. Whatever extra I need to share with you, I'll be sharing. So some common points. Before we proceed further with specific entities, there are some common points which you have to keep in mind while reading and learning about every type of entity. What are these points? Audit of different types of entities. Major points that must be kept in mind while performing the audit of all these. The miscellaneous, the educational institution, charitable institution, cinema, whatever is there in the chapter. These are some general points, some general considerations that you need to keep in mind while auditing any kind of entity, whether it is a bank, anything. What are these? The first part is constitution of the organization. And the second is evaluating the internal control system of the organization. So what is there in the constitution of the organization? Examine the constitution. What do you mean by constitution? What form of business is the entity? What form? Like it's a sole proprietor, it's a partnership, LLP, company. What form is it? Then examine the bylaws or rules, regulations, trust deed. I hope that's fine now. Examine the bylaws or rules, regulations or trust deed. Right? What are the bylaws or rules and regulations? You see company, the AOA, the MOA, Memorandum of Association and Articles, right? In the case of trust, in the case of societies, there's a deed. In the case of partnership, there is a deed. So it lays down the rules or regulations. Then examine the powers of the members of the management and other officers. If you have seen a partnership deed, it lays down specifically who is the working partner, who is the sleeping partner, what are the powers of the working partner, rights of the partners, what is whether we can give remuneration to them or not. So this is what is there in the constitution. Examine the minute books of managing committee and of members general meeting as the case may be. So this is something which you have to do just as a warm up during the audit, right? You are going to start the audit. It is just a warm up, a bit of knowledge. SA 315, knowledge of the client's business and the working environment. The SA 315, so that you can move to SA 330, risk assessment. So you have to understand the constitution, you have to understand the powers, and you have to go through the minute books to understand the meetings, what kind of meetings have been held, what are the decisions being taken, and what other important matters they have been discussing all through. Then we have the internal control system. So we have understood the chart, the constitutional chart, or say we have understood the Kundli, the chart, organization chart of the entity. Now we come towards how are the internal controls. Our audit depends upon internal controls as well. We test the controls. We also use substantive audit procedures. We test the controls as well to get the knowledge of the strength of internal controls so that we are able to design our audit procedures accordingly. If the controls are weak, control risk is high, and to mitigate the risk, we have to keep the detection risk low. And to keep the detection risk low, we have to frame our audit program and procedures accordingly. Right? If the controls are good, strong, control risk is low, detection risk could be there somewhat because controls are really good. So as to keep the risk, to mitigate it to the lowest possible level, you have to examine the accounting policies followed and accounting records maintained. What are the accounting policies being followed? Accrual basis, cash basis, what entities for following accrual, cash. There are a lot of other policies, depreciation, everything, what kind of estimates they are using, and how are the accounting records being maintained? Electronically, manually, and who is responsible, what kind of different records are they maintaining, what kind of physical records are they maintaining. Check the various receipts of the organization in the form of fees, rent, income on investment, donations, and grants. Whatever they are getting in the form of receipts, it could be a donation, it could be a fees like a hospital, it could be a educational institution. Whatever they have investment, they will be getting returns on that, interest, dividends, and donation and grants given to NGOs, charitable institutions, hospitals, educational institutions, right? You could have seen in the past 1.5 years, during lockdown, donations being given to almost every kind of hospital. People would have been donating for ventilators, for every other thing required during the past 1 year for these purposes. So how are these receipts being recorded in the accounting books? Checking the various expenditure of the organization, like to staff and common expenses. Like, so what are you doing? If the normal expense, the tea and coffee expense is somewhere around 10,000 to 15,000 per month, and we have debited tea and entertainment expenses 50,000. Why are you drinking tea? There are only 4 to 5 people in the organization, and you're drinking tea like anything. What are you doing? You're not having breakfast or lunch. Just tea every time, 50,000. So this is something which hits the materiality factor, SA 320. So you have to check this. What kind of, the embezzlement is there. And verification of assets and liabilities is common. You have done it in chapter 9. So you see these common points. What are these common points? These common points are nothing, but you have what you have done till now during your audit journey. What you have done now, you could find any chapter of audit, you can place it over here. So the whole journey of audit, whatever we have read, whatever we have learned, we are going to apply in this chapter. Right? So let's move ahead. Okay. Just a second. Right. So let's move ahead. So we'll start with the easiest one, the sole proprietor, right? It is the easiest one. When you get promoted to the 11th class, your plus one, what is the first thing you read about the forms of business organization? The sole proprietor. You take baby steps, huh? Sole proprietor, partnership, then company, right? It makes you easier. It makes it easier for you to grasp the concepts. So again, we'll follow that same pattern in our chapter as well, from the lowest to the highest, right? From the easiest to the trickiest. So today we'll be starting with the sole proprietor, right? So who is a sole proprietor? A sole proprietor is a person who works on individual basis. While preparing its balance sheet, the firm's balance sheet, you prepared the capital account, right? Sole proprietor is capital. We have read about the business entity concept. Business and businessman are two different persons. A sole proprietor invests his savings in the business to run a business, to start a business and then run it successfully, extracts profits from the business, keeps something from himself, and then again reinvest some portion of it. The sole proprietor. Please understand over here the difference between a sole proprietor and an individual. When you are a sole proprietor, you generally, actually, when you are a sole proprietor, you work under some name, some firm name, right? Messrs. This, and associates, whatever you name given to your firm. But when you work as an individual, you can work in your individual name as well. In that case, you need not give your firm a name. Capital account is there, everything is there. But when you work under a firm name, that is called sole proprietorship firm. Okay. A sole proprietor, again, it says no legal obligation for a sole proprietor to have his accounts audited, right? Here, no legal obligation means there is no sole proprietorship act. There is no act like this. But again, when it comes to income tax lays some restrictions. It has some conditions that a person has to get his accounts audited on some, you can say, on some conditions being met. You will read about it, or you might have read about it in your taxation chapter, section 44AB, tax audits. However, he may get his financial statements audited due to regulatory requirements. What are the regulatory requirements? If no legal obligation, what are the regulatory? Who are the regulators in the market? The regulators are RBI, right? Insurance authorities, different finance companies. These are the regulators. RBI is the regulator in the banking market. So there could be regulatory requirements. If you join your office for articleship, you'll get to see that a person is not required to get his accounts audited under income tax. He's exempt from income tax audit as he's eligible with all the conditions which are there. But when he goes to the bank and applies for a loan, the bank asks him, get it certified from get you a financial statement certified from a chartered accountant. He says, what? I'm exempt from audit. I need not get my accounts audited because I fall below the monetary limits. Bank says, no, please get it audited, get it certified, if not audited. So that is different assurance engagement. You might be reading about it in your auditing pronouncements in the final level. Okay. So then, as per the regulatory requirements, because bank, who is regulating the banks? The RBI. And RBI has given them laid down the conditions, and we are giving this kind of loan up to this limit. You have to take balance sheets, certified balance sheets from the client, from the borrower. So there are some regulatory requirements. For example, insurance claims. We have taken a loss of profit or a stock insurance policy. They want your balance sheets to be certified. They don't believe on it that you yourselves are giving the balance sheet self-certified. I'm not eligible to get my accounts audited. The insurance company would ask you, get it certified. So these are the regulatory requirements which are imposed by the regulator. In that case, a sole proprietor might need to get his accounts audited. Auditors of sole propriety concern shall be appointed by the sole proprietor himself. Where is the point? There is no particular authority, a board or something like that, which is going to appoint the auditor for the sole proprietors. Okay. Sole proprietor can determine the scope of the audit as well as the condition under which it is to be carried out. It is completely between the sole proprietor and the auditor. What actually he needs to get certified. Suppose he comes with the balance sheet and says that I want to get this particular balance sheet for this particular financial year certified. We'll ask for some details, whatever you can provide, whatever he cannot provide, we'll accordingly disclaim our opinion. So scope of audit, only whoever is appointing, he can decide the scope of audit. From auditor's point of view, it is desirable that the contract of appointment of auditor in such a case should be in writing, right? It should be in writing and should clearly define the scope of the work which the auditor is expected to carry out. So whatever you do, you need not worry about the stock. The stock is good. I can give you written representation. I have valued the stock on FIFO basis, on cost or NRV, whichever is less. I have valued my cost on weighted average capital basis, weighted average method, and this is what the amount is. Okay. If the appointment of the auditor is not in writing, the auditor should write to his client explaining the scope of his duties. So it again depends upon the auditor and the sole proprietor. You can tell him that I need proper engagement letter. I'm sending an engagement letter. I want a proper contract. If you want it verbal, it can be verbal. It is not mandatory. Zaruri nahi hai. It could be a verbal contract as well. That if you'll do audit my books, yes, I'll do. While doing so, he should state the limitations, if any, placed upon his work to obtain the client's confirmation. Okay. So if it is the appointment is not in writing, the auditor should write his client that this is my duty, whatever, this is your duty, this is my duty, and these are the limitations which your scope has put upon my work. And in the case of a change of auditor, it would be duty of incoming auditor to communicate with the previous auditor. So this point is really, really important. Okay. This point is really, really important. In case of change of auditor, it would be duty of incoming auditor to communicate with the previous auditor. So if you are auditing, if you're not auditing any books for the first time, some other auditor was another auditor was auditing it. Now the client is shifted to you. So it is your professional duty to communicate with the previous auditor that this particular person wants to get his books audited by me this year. We have to take an NOC, no objection certificate, under the Chartered Accountants Act. You have to take the NOC from your professional brother, sister, that yes, they are allowing us. If there is no problem involved, no other issues. Okay. So this is what sole proprietor. How long did this take to audit the books of sole proprietorship? Generally, not much time. Abhishek. Not much time. Normal books, normal sales like 10 lakhs, 20 lakhs, 30 lakhs. It depends if you fall under income tax. Like sole proprietors usually get their books audited only if required by GST or income tax. Right? If required under the income tax, those limits, if they cross those limits, the profits cross those limits, only then they come to you to get their books audited. Otherwise, nobody is bothered unless and until the bank asks them, we'll sanction the limit only if we get the audited or the certified statements. So you'll understand when you read about and gain knowledge from the essays, the 700 series, the 800 series, what are the compilation procedures, right? There are some compilation procedures as well. Compiled financial statements, compiled balance sheets. They are different from the audited balance sheets. You don't audit the books. You just compile them, whatever your client has produced in front of you. So you just compile that. So that is a compilation engagement. You'll read about it in the 800 series essays, standards on auditing. Okay. Let's move ahead. Let's move to partnership firm. So we all have read about a partnership firm. The second step, the appointment of auditors. Auditor is appointed by the partners. Yes. Again, the partners are the ones who appoint the auditor on the basis of a decision taken by them as per the partnership agreement. So when it was sole proprietor, he was the one responsible if he wants to get his accounts audited. In the case of a partnership firm, the partners. But obvious, his remuneration is also fixed by the partners, completely fine. The letter of appointment should clearly state the nature and the scope of audit which is to be carried out and particulars of limitations, if any, under which he would have to function. What could be the limitations? Can anybody tell me, please? What could be the limitations in a normal audit? It is a normal audit, a partnership firm audit. What could be the limitations? Jamil, what are you referring to? Point G from sole proprietorship or over here in partnership firm? So I just want to know there are inherent limitations of audit, right? You have read about it. Now, what could be the limitations over here, which the partners may inform the auditors about, intimate them that these are the limitations under which you have to work. We are appointing you, this is your remuneration, and we are giving you letter of appointment. This is the nature of audit you have to carry out. This is your scope, what all you have to cover under your audit, and what could be the limitations, if any, under which he would have to function. What could be the limitations? Can you just tell me? Suppose you are visiting a client. No. Some misstatements are not detected, not kind of limitations. Very general limitations. Come on, very general limitations. So I'll give you an example. Sir, the accountant is available only for 2 days. We know nothing about the accounts. He'll be only able to help you. You have to finish your work in 2 days. This is a limitation. Sir, our office is in this place. Our office is in Delhi. But our books are maintained at Rohtak. Our books are maintained in Mathura. Our books are maintained in Bharatpur. Normal limitation. You'll have to get through all those through mails and everything. So we forgot where we have kept the partnership deed. Even the soft copy is not available. This is a major limitation. Then we have forgot where is the partnership deed. We handed it over to the accountant to maintain a file. The file is untraceable. We are not able to trace the file. Even the soft copy is not available. Yes, Jamil, it is important. When you'll learn about it, you'll read about it in the professional ethics topic in your CA final. You'll get to know that if they have been audited by any other person, any other professional brother, then it is required that you take no objection certificate. That condition is not under income tax law. This is under the Chartered Accountants Act. Yeah, lack of support, sir, will not be there to help you. You have to come with your team. Sir, these are the computers. Sir, welcome to our office. Computer 1, computer 2, computer 3. Sir, there is the water dispenser. That is the coffee vending machine. Feel yourselves at home and carry out the audit. We are going. Bye-bye, Tata. This is the limitation. Yes, you guys are coming up with quite professional language. When I wanted to, it is the last session of your audit journey. We have learned about many professional words and the professional vocabulary, the technical jargon, and you are using that particular audit vocabulary. And I'm really happy that you have understood some points, some words which you can use while writing your answers in the exam. These professional words, it's really nice to see that you're using such words. Limitation on scope, frauds and errors, lack of proof, misstatements not detected. It's really nice. But here, it's just whatever examples I've given you. Okay. Again, point number D, what Jamila asked me, in case of change of auditor, duty of incoming auditor to communicate with the previous auditor. The auditor may particularly ensure application of accounting standards prescribed by the institute. So you have to ensure application of accounting standards. When you are auditing a company, then you have to make sure the standards prescribed by MCA, Ministry of Corporate Affairs, are being followed. But in general cases, whether it is a sole proprietor or a partnership firm or any other case, you have to make sure whatever accounting standards are there issued by the Institute of Chartered Accountants of India, and Institute of Chartered Accountants of India is the only competent authority under the Government of India which has been given this duty to come out with these standards, to issue standards, accounting standards, right? No other body. So accounting standards which have been issued by the Institute of Chartered Accountants of India. Okay. Do you know the story of standards? What kind of standards are there? There are accounting standards, there are auditing standards, there are secretarial standards. Different kind of standards are there. At your level, you are doing accounting standards and auditing standards issued by the Institute of Chartered Accountants of India. But because this is our core field, accounting and auditing is our core field, right? Our USP, accounting and auditing. So accounting standards are issued by ICAI, auditing standards issued by ICAI, then other bodies issue their particular standards, like in the case of companies, secretarial standards. So there are different kind of standards. What are standards basically? Conventions being followed since a law times, and then they have been converted into some standardized rules. So whatever you're doing, even if you are discussing the balance sheet of your firm with your father, yes, Papa, please दिखाना हम क्या-क्या account. You can tell them देखो accounting standard ऐसे follow करनी है. आपने stock कितने पे दिखाया है? At what amount have you shown the creditors and all that stuff? We have to follow this accounting standard. Okay. So, in case the firm is required to get its accounts audited under the requirements of any institute, the auditor will have to qualify the report in case of non-compliance with the accounting standard. So there is a particular law. This law states that you have to audit the financials to get your statements audited by a chartered accountant. For example, societies, different societies in different states, they are governed by their state cooperative acts. When we'll come to cooperative societies, I'll tell you. I'm just giving you an example, right? So in case of partnership firms as well, if there is, so this is not like this is going to happen. They have given here a condition. They've given here a case. If a case comes like this, that a partnership firm has to get its account audited under requirements of any institute, the auditor will have to qualify the report in case of non-compliance with the accounting standards. You all have learned about income computation and disclosure standards in income tax. Okay, these are the new kind of standards issued just recently, 2 to 3 years back. Income computation and disclosure standards, the ICDS. So there are a lot of standards: accounting standards, auditing standards, ICDS, and then INDAS, which you are going to read in your finals. So if you are able to follow the accounting standards under that particular law, carrying out audit under that particular law, and you are able to follow the accounting standards issued by ICAI, it is completely fine. If it is in contradiction, then you have to give qualification in your report that as a chartered accountant, it was not possible for me to check the compliance, or there is non-compliance with those accounting standards owing to the limitations under this particular law. Alternatively, what you can do, only disclosure of non-compliance with accounting standards would be sufficient without making it a subject matter of qualifications, because clients usually run away from qualifications while qualifying the report. Qualification actually leaves a negative mark. So don't qualify. So there is another option as well. You just disclose the non-compliances. Either they disclose in their notes to accounts, or you disclose in your audit report. If they don't disclose it in their notes to accounts, that this much non-compliance is there with this accounting standards, right? So this is what is related to appointment of auditors. Okay, let's move ahead. Matters to be considered before starting audit. What are the matters we need to consider before starting the audit? The name and style under which the business shall be conducted. It is available in the partnership deed. If you have read a partnership deed, what does it look like? We this, we A resident of this, B resident of this, C resident at this, hereby form this partnership to carry out the business of electronics, to carry out the business of this, under the name and style of this. That is it. The duration of the partnerships, you have read about it. Partnership at will, partnership for a fixed period, right? The amount of capital that should be contributed by each partner, whether it will be fixed or it could be varied from year to year. Starting May, 3 partners, A, B, C, and C usually dies. This is an accounting joke, huh? Whenever there is a partnership form, it is the partner C who always dies. He is the one who always sacrifices, right? So this is all written in the partnership deed. So amount of capital that should be contributed by each partner, whatever capital they are going to contribute, who is going to contribute how much capital. Since suppose there is some silent partner, or there is a partner who lends his goodwill, his name, so he doesn't contribute any partnership capital. The period at the end of which the accounts of the partnership will be closed periodically, and the proportions in which the profit shall be divided among the partners or losses shall have to be contributed by them, whether the losses shall be borne by the partners or whether any of the partners will not be required to do so. Very important part. This is very important because when you are auditing the financial statements of a partnership firm, you go through their capital accounts, because in the profit and loss account, there is remuneration payable to partners, partners' salary, partners' interest. So this particular matter is very important. For how much period will they be drawing up their financial statements? So you have read about it. A partnership firm was formed on 15th of March of the previous year. Even for 15 days or even for 13 days. It is there under different statutes and laws that your financial year should be of 12 months, like an income tax, right? So the partnership deed will lay down that will be closing. Usually it is 1 year, 12 months. And profit or loss sharing ratio. In what ratio will the profits would be shared? And if there is a loss, in what ratio would the loss would be borne by the partners? This is a myth among the commerce students that when it says profit sharing ratio, it automatically means losses in the same ratio. Unless provided otherwise. I'm using a legal term, huh? Laws phrase. Unless provided otherwise. So profit or loss sharing ratio, they can set up different ratios. Profit sharing ratio could be different and loss sharing ratio could be different. So what is it saying over here? That in which proportion the profit could be divided among the partners or losses shall be contributed by them. Piecemeal distribution, you would have read about it. Garner versus Murray rule. And whether the losses would be borne by the partners or whether by all the partners or this particular partners. If we have read about Garner versus Murray rule in your advanced accounting, so you'll get to know about it. You can recall that only some partners, A and B, will continue to the losses. C will not contribute. Only solvent partners will contribute to the losses in this particular ratio. So this is all there in the partnership deed, and you ought to read it. पढ़नी पड़ेगी आपको पूरी पार्टनरशिप डीड. You must read it before starting the audit. The provisions regarding the maintenance of books of account and the matters which must be taken into account for determining the profits of the firm available for division among the partners. If they have, like for example, they want some reserves to be created, they want their provision for depreciation account be maintained. Also, the period within which accounts can be reopened for correcting a manifest error. This is all there in the partnership. If it is there, normally a partnership deed is really simple, but these points you could find in a complex deed as well. Borrowing capacity of the partnership, right? When it is not implied, what is the limit up to which the particular partner representing the firm can borrow from the market or from financial institutions? Very important point, the seventh point. The rate at which interest would be allowed on capitals and loans. Capital contributed by the partners, loan provided by the partners, and the rate at which it will charge their drawings and current accounts. A partner has taken loan or on the withdrawals, right? So what is the rate at which the partnership is going to pay the partners the interest, and what is the rate at which it is going to charge? So interest from partners, credit side of profit and loss account. Interest charged to partners, right? Interest charged to partners, credit side of the profit and loss account, because it is an income for the firm. But if it gives interest to the partners on their capital, on the loans, it is on the debit side. It is an expense for the firm. Certain limits are there, definitely. And whether any salaries are payable, partner salary, partner remuneration to the partners or withdrawal are permitted against share of profits, and to what extent. You can withdraw up to this much extent only in this year, or whatever is the division of profits, you can withdraw only 40% or up to 50% of your capital as on date. These restrictions are not, you will not find these restrictions in a normal partnership, but these you can find them in some big businesses or deeds. Duties of the partners as regards the management. Who is the working partner? The person who is the working partner, he'll be able to help you in the accounts. Whatever transactions you want to inquire, he's the person who is going to tell you, yes, ye check use kaata tha, and this is what ye dealing inke saath hui hai, and yes, he's our creditor, these are our bad debts. So who is going to manage the firm? Managing partner. All A, B, and C will be the managing partners. Only A and B will be the managing partners. So the auditor must be very much clear with this. That C, although he'll be reporting to all of them, the partners, but he needs to know that who is the managing partner, so that if I need to have a discussion, I would have to write to him about any issue. Who shall operate the bank account? Again, very, very important. Who shall operate the bank account? In the partnership deed, you can find one partner jointly, either A or B, jointly by A and B. Either A can sign or B can sign. Jointly, A and B both have to sign and operate the bank account. So you have to be very much sure with the partnership there that what are the rights given to the partners in case of banking operations. And if there are any surplus funds with the partnership, how are they investing it? Is a deed allowing them, or they have written separately? So they write the deed for the first time. If anything which is there, which is left, or they want to make any additions to it, they can always write a supplementary deed. For the remaining points, for the points which they want to add, they can annex it, they can attach it to the main partnership deed, right? Limitations and restrictions, agreed upon rights and powers of partners. So these are all the points. If you take up the partnership deed, you will find it over there. Advantages of audit of a partnership firm. This is the most asked 4 marks question in your exam. You will find it in your revision test papers as well, and in your previous papers as well. Advantages of audit of a partnership firm. What are the advantages? If there is dispute among the partners, then Audited accounts play their role. Audited accounts are considered as a good evidence, a strong evidence by the courts, because they have been audited by an independent third party, a chartered accountant, who is not affected by any of the partners. Nobody can influence him. So courts consider it as a good evidence. In the case of disputes, a partner can put forward the financial statements. Judge Saab, Your Honor, dekhiye, see, this is my balance lying in the audited financial statements, and they are, after my retirement or I want to leave the firm, they are not ready to give me this much amount. It is there. It is speaking for itself in the financial statements. Disputes, right? And make sure, if there is a dispute, your partnership firm should be registered, because registration of partnership firms is optional. So it is under the scope of a state. Your state authorities, they give you registration as per the region. So if your partnership firm is registered, only then you can use it as an evidence, the statements in a court. Dissolution, obviously, during the dissolution process, you prepare up the accounts till that date, on the dissolution date, and you see what are the profits available till that date. You divide them, the expenses, everything. While a firm gets dissolved, you'll get to see in your offices that when you prepare the balance sheet of the financial statements of a partnership firm, okay? So suppose a partner, there is dissolution of partnership or there is dissolution of firm. In both the cases, when there is dissolution of partnership, suppose a partner retires. So from the starting of the previous year, 1st April to that particular date when the partner is retiring, you frame up the accounts, okay? And then you prepare the profit and loss account till that date. You divide the profits or losses accordingly. The profits of the outgoing partner are credited to his capital account. And then from next year onwards, a new profit and loss account is prepared to share the new profits and losses from that particular date till the end of the year between or among the new partners. Balance sheet is prepared only for the last day. Make that sure. A balance sheet is prepared on any particular date. So balance sheet is always prepared on the last date unless otherwise required for any other purpose. And profit and loss accounts are prepared period wise, from this period to this period, from this particular date to this particular date. So n number of changes during the year in the partnership, n number of profit and loss accounts will have to prepare. But for the firm as a whole, you have to prepare only one balance sheet. This is a very important point, practical point from the point of view of a partnership firm. Okay. Reliability, but obviously, if courts are expecting it as considering it as an evidence, then they are reliable. That is why courts are considering it as reliable. Admission of a partner. Partner C retires. This time we are not letting partner C die. His life is very important to us. We are not letting him die. We are asking him to retire. So partner C retires. Partner D wants to join in. So partner D wants to know what are the prospects for me if I join your partnership firm. So we put forward, these are our financials. C, the turnover, the profits, the interest being credited to partner's account, what good business we are doing. So this is what a lucrative financial statement if we put forward, put in front of a partner wishing to get admission into our firm. Control, but obvious. An audit is an effective safeguard against any undue advantage being taken by a working partner or partners, especially in case of those partners who are not actively associated with the working of the firm. Partner A and partner B are the managing partners. They are managing the daily affairs of the partnership firm. Okay. They are managing the daily affairs of the partnership firm. Partner C knows nothing about it. And partner A and B put forward a balance sheet. See, this is the profits we have made, and this is the position of the firm. Either partner C has full trust on partner A and B, or get your accounts audited. A chartered accountant will audit the accounts and they'll tell you straightforward, This is what A and B are doing. Why are you taking so much of remuneration? Where is the cash going? Where is this embezzlement? So C can rely upon the auditor that he has audited the accounts, then the accounts represent a true and fair view. Okay. Then the last point, someone has messaged that the screen is blurred. Is it so? Is the screen blurred? If anybody could write to me. So when you are conducting the audit of a partnership firm, what are the points that you need to keep in mind? Your appointment, the letter of appointment should be signed by a partner who is duly authorized to appoint you. You should check in the deed whether this particular partner has been enshrined with the powers that he may appoint you. Right? You have to see the status, the nature, and the scope of your audit. The nature and scope of your audit, right? Limitations, we discussed what kind of limitations. Partnership deed, you should always ask for the partnership deed. Every time, even if it is a recurring audit, you should always ask for a partnership deed. Sometimes it happens that the partners themselves change the deed on their own and they don't even tell you. Okay, so we always have to check the partnership deed every time it has been signed by all the partners and it has been registered with the registrar of firms if the partners want. It is right now it is optional to register your partnership firm. But if you want to take legal benefits in case of disputes among the partners or with the third party as well, you can enter into a dispute on the third party as well. In such kind of situations as well, the registration of partnership deed or partnership firm is really important. Okay, you can understand about the capital contribution, the profit sharing ratios, interest on capital, etc. Minutes book, if the partners okay, the screen is not blurred. Would request Vinay, please either try some Zoom options or something. Okay, minutes book is really easy. If partners are conducting some meetings, they're discussing anything, if they're jotting it down, you can always ask for the minutes books. What are the objects of the partnership firm? Yes, we are going to start a business of dealing in electronics. So is the business, what the business has been authorized by the partnership agreement, are the partners doing that business only? Or they have shifted to some other business, so it should be properly incorporated in the partnership deed. The partnership deed should be accordingly modified. If it is written something else, some other object is written in the partnership deed, and you are doing some other business, it strikes the auditor. What are they doing? Books of account. Who is going to maintain the books of account in what form? Who do we have to ask for the books of account? Mutual interest. No, it is the duty of the auditor to check whatever is there in the partnership deed, how much the working partner is going to get the remuneration for devoting his time, what is the rate of interest they are going to give, what is the rate of interest they are going to charge on drawings. The auditor has to check this because it could be there could be a foul play with the third partner by two partners or by one partner only with the silent partners. So there is mutual trust and faith. You always have read fiduciary relations. If appointment of auditor is not as per the partnership deed, this is a rare case because partners and partnership firm might be different constituents. But if it is not as per the partnership deed, you can always ask for it. Your partnership deed is stating something else. Please either modify your partnership deed or go as per your partnership deed if you want to appoint me as an auditor. Okay, right, Manish? Then mutual interest, fiduciary capacity, mutual trust, faith, tax provisions. So whether you have made provisions for tax, usually in the case of partnership firms, tax provisions are not debited to the profit and loss account. It is the profit and loss appropriation account. You might have read about it, no? Below the line profit and loss account. Okay, so how have the tax provisions properly made in the accounts? and what other legislations are applicable. So if you are auditing the partnership firm under the Income Tax Act, you have to see the provisions of income tax as well. Okay. Division of profits is as per the agreed profit sharing ratio as per the partnership deed. Something else is written in the partnership deed. There is 3:2:1 and you are dividing it equally. This is not going to work. Either modify the partnership deed is the constitution. It is the constitution which is setting forth with the bylaws which you have to follow while doing business. If you're not following the constitution of your own organization, what can we expect from you? Either modify that constitution or go with it. Don't go against it. So I like you to tell you a point over here. It says you have to, the text provision, like you have to see the regulations as per the section 44AB of the Income Tax Act. So this is an example, a very good example. The partnership deed says that you have to pay the working partner a remuneration 30,000 per month. So you have to pay 3,60,000. You have to pay 3,60,000 per annum to the working partner. But under income tax, if you've read those people who have read about taxation provisions in the first group, income tax subject, there is a limit. 90% and 60%. 90% of the book profits till 3 lakh, and after 3 lakh, over and above 3 lakh, 60%. So as per partnership deed, you are bound to give your partner 3,60,000. But as per Income Tax Act has set up a limit. And if you are auditing the books of a partnership firm under the Income Tax Act, you have to go by the provisions of Income Tax Act. So you might have done the provisions over there. If 3,60,000, only 3 lakh salary is allowed, or 2,80,000, something like this is allowed. Whatever the limit you get, as per income tax, under the Income Tax Act, you can allow that much of salary. You need not change the books. You don't have to change the books. It is there in your computation of income. While calculating your income for the purposes of Income Tax Act, you'll take those provisions in your. Okay. Fine. So we have read about sole proprietorship. We have read about partnership firm, and the next 15 minutes we'll read about LLP, then we'll take a break. Okay. What is an LLP? So there was this partnership form of organization where there was flexibility in business. The partners could contribute their capitals, they could withdraw anytime, they could give loan, there was not much forms involved. But there was this company form of organization as well, which is very lucrative. Initially, the incorporation is a bit complex, but there are a host of benefits available in the corporate form of organization, or sometimes like in the franchisee business. When you want to take the franchisee of any famous brand, they ask you, we give franchises only, we enter into agreement for our franchisee with only those businesses which have adopted the corporate form of organization, which are actually companies. We enter into franchisee agreements with only companies form of organizations. So there are many businesses you'll find around you which never wanted to go for the corporate form, but they have opted for the corporate form because unless and until they had formed a company, they'll not have got that franchisee. So there was this problem that in the corporate form, there was a host of compliances. In the partnership form, there was this unlimited liability. While in corporate form, you enjoyed limited liability up to the value of shares, face value of shares you hold. So there were some features of the partnership form, some features of the corporate form, which were good. So the businesses felt, the market, the economy felt the need of a hybrid form of organization, which has the features of a partnership and the good features of a corporate form as well. And that gave birth to the concept of limited liability partnership. So it is a partnership. We are giving you partnership, but with the features of company. It is a hybrid breed of companies and partnership form of organization. In partnerships, the liability is unlimited. So say A partnership with a limited liability is limited liability partnership. Okay, so let's to just give a break. No, not that actual break, to just give a break to your eyes. Let's see what a limited liability partnership is. Okay, here we go. So I suppose, Mr. Harchandani, you got your answer in the video itself. We'll discuss that too. Distinctive features of an LLP. Alternative corporate business form that gives benefit of limited liability of a company and flexibility of partnership as well. Known as LLP, combines the advantages of both the company and the partnership into a single form of organization. As I told you, hybrid. It is governed by the Limited Liability Partnership Act 2008, known as the LLP Act 2008. Right? Limited Liability Partnership Act 2008. So it is governed as the partnerships. The partnerships are governed by the Partnership Act 1932. So Limited Liability Partnership Act, a new form of organization under a new enactment. So which has come into force with effect from April 1, 2009. The Indian Partnership Act 1932 is not applicable to an LLP. This could be a correct incorrect. So usually it is a usual myth that Limited Liability Partnership Act is also applicable to an LLP and the Partnership Act is also applicable. इतना बोझ नहीं डालना LLP के ऊपर. Okay. So just the Limited Liability Partnership Act 2008. If we are coming out with an easy form, with a hybrid form, with a form which was wanted at that time, so we are not going to burden it with more and more compliances with 2x. Only the Limited Liability Partnership Act. It is a body incorporate and legal entity separate from its partners, having perpetual succession, can own assets in its name and sue and be sued. It can case upon the third party and also be sued. It can also be sued. Sued means case karna. The partners have the right to manage the business directly, unlike corporate shareholders. So what is the difference? In the corporate form, the ownership and the management are different. Owned by shareholders and managed by the board of directors, governed by the board of directors. Here, the ownership and management is the same. The partners are the owners and they are managing the business directly. Shareholders are not managing the business. They just own the shares. Whatever important decisions are required in the shareholders meeting, they get invitation for that. Otherwise, whatever duties they have given to the board of directors, rights and powers, those decisions are taken by the board itself. One partner is not responsible or liable. One partner is not responsible or liable for another partner's misconduct or negligence. In the partnership, it was there. You were liable for whatever is happening in the partnership firm unless you prove to the contrary that I am not involved in this fraud or something like this. Here, they have given it directly. No one particular partner is responsible for other partners' acts, misconduct, or negligence. Minimum of 2 partners, maximum no limit. And you can see in the case of companies, there is a limit. Minimum of 2 partners and no maximum limit. The rights and duties of partners in an LLP will be governed by the agreement between the partners. Partners have the flexibility to devise the agreement as per their choice, right? So it is called the LLP agreement. Like in the case of partnership, it is a partnership deed. In the case of an LLP, it is an LLP agreement. The deed form is known as LLP agreement. And mind you, in the case of partnership firm, we have partners, simple partners. There could be managing partners, sleeping partners like this. In the case of LLP, we have partners and we have designated partners. Like in the case of companies, we had directors. In this case, we have designated partners, which have been designated with the duty of handling the affairs of the LLP. So they are known as designated partners, like the monitors in the class, and school days, colleges, the monitors, one or monitor or 2 monitor, or those who will handle the whole class. So these are the designated partners. They'll carry out every kind of work. They are the persons who have been given some extra powers and they have some duties as well. So these 2 partners, like in the case of companies, you have to take DIN, Director Identification Number. So LLPs are incorporated under MCA. Huge difference with the Partnership Act. In the case of Partnership Act, you have to apply to your registrar of firms in your area, your state, registrar of firms in your area. But in the case of LLP, you have to get it incorporated under MCA. Okay, like a company is incorporated, you have filed all the forms at MCA website. So LLPs are governed under Ministry of Corporate Affairs. So again, like in the case of directors, you need DIN. In the case of LLP, there should be at least 2 partners who are designated partners, at least 2. You can make all the partners designated partners. You can choose only 2, 3, 4, but at least 2 should be there who are designated partners. If there are only 2 partners, let the 2 be designated partners. Who will be under an obligation to obtain the DPIN? What is the DPIN? Designated Partner Identification Number. This could be an MCQ in a case study. This particular designated partner needs to apply for A, PAN, B, DPIN, C, DIN. So the person gets confused whether it's a DPIN or a DIN. So DPIN, right? It is a DPIN. So whatever extra I'm telling you over here, that is for your practical knowledge to understand the concept better. If you feel the need to write it down, you can write it down. I'm not going to write it over here or make a part of it your presentation because that is something which is out of your scope. I'm telling you for your practical experience. For example, if there is a person, suppose I am the person, Vipul is the director in a company. He is already having DIN with him, Director Identification Number. It is a number, it is an identification number which is issued by MCA, Ministry of Corporate Affairs, right? If you belong to the same family and you have got a tag, they'll not give you another tag. If Vipul is a director in a company and now he's also forming an LLP for some another business, he need not apply for DPIN because he is already having DIN. What are DPIN and DIN? DPIN and DIN are, what are these? They are the identification numbers issued by Ministry of Corporate Affairs. Okay, they are the identification numbers issued by the Ministry of Corporate Affairs. Fine. So if a person is having DIN because he is a director in some company, he need not apply for DPIN. But a person who is new to MCA, he's he's applying to MCA for the very first time as a business constituent. If he is applying for a directorship as a company director, he has to take DIN, and for an LLP, he has to take a DPIN, right? Fine. Okay, guys. So that is what, students, this was all the distinctive features of an LLP. Any doubts till now? LLP is really important because you might have read in the news just recently that the government has withdrawn many provisions from the LLP Act. There were many strict punishments and compliances were there in the LLP Act which have been withdrawn just recently, but not applicable for your attempt. So if you want to know more about LLPs, and you must read that particular notification issued just 3 to 4 days back, right? Any doubts till now? We'll take break. I just wanted to make sure that you understand the concept of an LLP before we proceed further with the audit steps of an LLP. LLP is really important, and questions relating to LLP are usually asked in your exams. Correct, incorrect, as well as direct questions. We are building up the base as of now. I'm going a bit slower. I'll speed up once you get accustomed to these entities. So you're just building up the base. I'm clearing you most of the things in the base itself. So once we go to the other entities, these basic things you don't trouble you. What could be the limitations? What are these forms? What is a DPIN? Something like this. If needed, can a director having DIN apply for DPIN, or he cannot apply? You need not apply, Priya. If DIN is there, it will serve the purpose. Why do you need so much of identification? I mean, we already having Aadhaar card, voter card, PAN card, and then you want DPIN and DIN as well. If you're having DIN, it is okay. Any identification now will do. Any identification, whether it's a DIN or DPIN. Sir, is there necessary that all partners should be designated partner? No. Only 2 partners, Manish. At least 2 partners. Others are the normal partners. Designated partners are used like the working partner in the case of a partnership firm, or the managing director in the case of a company. It's the same, the designated partner. So at least 2 partners should be designated partners. More than 2 partners is the LLP's wish, the partner's wish, joint wish. How many of them want to be the designated partners? Okay. Sure, why not? Can you please repeat the point E? Point E of LLPs. The partners have the right to manage the business directly, unlike corporate shareholders. Namrata. Yes, Namrata. If you see in the corporate form of organization, what do you have? You have the shareholders who are the owners, who purchase the shares, who are the owners of the organization. Their capital is what is invested in the company. They just give the money, right? Who manages the daily affairs of the company firm? The company, the board of directors. The shareholders appoint the board of directors, and the board of directors manage the daily affairs of the business. So the owners are sitting at their home. They have just invested their business as they have given the duty to the directors that you have to manage the business. We don't want to take the pain. You manage the business, take your remuneration and give us the profits. So the ownership and the management of the business are different. Somebody else is owning the business, and a different person is managing the business. In the case of sole proprietorships, LLPs and partnerships, the person who owns the business manages the business. The partners own the business, their capital is invested in the business, and they themselves are managing the business. No third parties. So this is what point E gives you, that LLP as a hybrid of partnerships and corporates. So it takes this particular benefit from the partnership form of organization. LLP, like partnership, the partners can manage the business directly. Not like the corporate form where ownership and management are different. This was point E. Okay, guys, so it's 7:20. We take a 10 minutes break till 7:30. You come back and then we'll proceed further with some peculiar points of an LLP, auditing an LLP, right? Okay. Let's take a break for 10 minutes. Okay, guys, we are back, students. Yes. So, Meenal. Meenal, like you get yourself registered under income tax, you have to take PAN, permanent account number. To vote, you have to take voters card, get a voters card, right, in your name. For other benefits available to an Indian citizen, you have to register under the Aadhaar system and get an Aadhaar card. In the same manner, under MCA, if you are opting for a corporate form or LLP form, so there they are governed. They are governed by. Just a second. I think voice is clear. So they are governed by MCA, Ministry of Corporate Affairs, right? So under Ministry of Corporate Affairs, you need some identification number. A person needs an identification number, just because if a person is not having identification number, some naughty elements can resort to frauds as well. This is the way they can trace you. They can trace your activities in the economic world, whatever you are doing, in how many companies you are a director, in how many LLPs you are a designated partner. Okay, so you have to take an identification number, and that identification number is DPIN, designated partner identification number. In the case of companies, you have to take DIN, director identification number, right? So let us move ahead. Here we go. Okay. So next is rules regarding accounts, audit, and returns of an LLP. An LLP shall be under obligation to maintain annual accounts reflecting true and fair view of its state of affairs. Normal, they have to maintain their annual accounts, books. LLPs are required to maintain books of accounts which shall contain what should be there in the books of accounts. Normal things. Particulars of all sum of money received, expended, the inflows and outflows by the LLP, and the nature of these receipts and expenditure. For what purpose did you expend the money, and from what source and for what this money was received. A record of assets and liabilities of LLP, normal point. Statement of cost of goods purchased, inventories, work in progress, finished goods, and cost of goods sold. Easy to maintain. You all have read about cost sheet and all. You can get it from there. Any other particulars which the partners may decide. So the partners may decide that these all other things should also be a record for this particular thing is also maintained, a record for the attendance, a record for the labor employed in the factory, a record for the personnel, whether skilled or unskilled should be made in detail. So whatever the partners may decide apart from this. Point number 2, really very, very important. Point number 2 from correct, incorrect point of view. Returns. So see, the part of returns, I'll tell you over here. Just listen to me carefully. Income tax, there is an annual return. You lay out your the income which you have earned in the previous year. You calculate the tax upon it, and then you pay it. This is an annual return. If you've read about TDS returns are quarterly returns. What actually is a return? Okay, suppose your mom goes out at some function to a relative for 2 to 3 days, right? And she comes back after 2 to 3 days. She talks to you daily over call, but when she comes back after 2 to 3 days, she'll tell, mom, उस दिन ऐसा हुआ था, उस दिन ऐसे किया था, I made the food myself, मैंने इस दिन ऐसा किया, इस दिन ऐसा किया. You just sum up everything what you have done in those 3 days, right? Although you were telling her on call as well, but now when she comes home, you sum up and tell her everything. And this is what we have been doing since the past 3 days, right? You tell her everything. Okay. What is that? You just summed up what you did in the past 3 days. In the same way, government wants, you are doing business, you are making tax payments, you are doing. So whatever you have been doing for the past 1 month or past 1 quarter, just sum it up, summarize it in a form, They lay out a form, they give a form, they come out with a form. Just fill everything in it and file it with us. Okay. So whatever income you have earned in the previous year, just put it in our form. We are giving you a form, put it over there, calculate the tax and just submit it. It is a form. In the same way, TDS, GST, there are monthly forms, there are quarterly forms. So whatever you have done in a month, whatever transactions and things you have done in a business, whatever is required as per the form, you fill in all the detailed information and you file that form. This is called a return. You have filed a return. So income tax, TDS, GST, right? Now we come to MCA. In MCA, under MCA, Ministry of Corporate Affairs. So Ministry of Corporate Affairs is a ministry under the Ministry of Finance, Government of India. So Ministry of Corporate Affairs has its own forms. Apart from the income tax forms, a business has to file the income tax return under the Income Tax Act. He has to file the GST returns under the GST Act. Okay. And he has to file those TDS returns and all under the Income Tax Act. Now he comes to the MCA. So under LLP Act, they have to file the LLP returns, the LLP forms. Under Companies Act, they have to file the company forms or the company forms as required by MCA. So what are these forms? These are the forms which are required by these particular acts. They're parent acts. LLP Acts wants be that as per the provisions of the Act, what have you done in the past 1 month, 3 months, quarter, or a year? You just sum it up in that form. For example, in one of the company's forms, if you want to change the director, you have to file the form with the company. If you want to change a designated partner, you have to file a form with MCA. So for companies and for limited liability partnerships, we have MCA as the parent institute. Whatever we need to change, modify in our business structure, in our business, we have to make sure that we are updating it with them by filing forms. Something new we have to do and regular compliance as well. So what we have done during the past 1 year, under LLP Act, you will file the LLP form. And LLP will file the LLP form. Under Companies Act, you will file the corporate forms. Going on the MCA website, you just file that form. It's as simple. For income tax, you go to the income tax website. For GST, you go to the GST website. For LLP forms and for the company forms, you go to the MCA website, create an account over there and log in over there and file your forms. Whatever information they require from you. Okay. So in the case of an LP, the forms I tell you are known as returns. So what are the returns required? The first return which you require to file in case of an LLP, a statement of accounts and solvency, SAS, a statement of accounts and solvency. What is accounts means that whatever accounts they require of you, what was the profit, what was the investment, all the financial statements, they may require to do the financial statements and solvency. It is a declaration that yes, your business is going good. It is on the basis of going concern assumption. There is no threat to the business. You are doing good. So statement of accounts and solvency that you are doing good. In Form 8, you have to learn Form 8. So statement of accounts and solvency is in Form 8. Shall be filed by every LLP. No limits. Every LLP, whether it is doing business, not doing business, whatever you are doing. No, Ayush, it is required for everything. There are regular forms as well, right? Like you have registered for your foundation course or your inter course, right? Then you file the examination form. So while for giving exam, you have to file the examination form. Then you file that form for your revaluation. You want re-verification, you file different from. Some students might need the field of re-verification, some might not need the field feel the need of re-verification. But every student has to file the registration form and the examination form. So there are some forms which are mandatory, some forms which are optional as per the circumstances. Okay. So a statement of accounts and solvency in Form 8 shall be filed by every LLP with the registrar. This registrar is registrar of companies only, ROC. Every year, mind you, every year. Okay. So this is an annual form. Form 8 is an annual form. Within a period of 30 days, within a period of 30 days, 30 दिन के अंदर, within 30 days from. So see, this from is very important. 30 days from the end of 6 months, the financial year to which the statement of account and solvency relates. From the end of 6 months of the financial year to which the statement of account and solvency relates. For the financial year 2021, right? It ends on 31st March 2021. 6 months from the end of 6 months. 6 months end on 30th September 2021. Now from this 6 months, 30 days. So what does it come? 30th October. Okay. You are filing Form 8, Statement of Accounts and Solvency for pre-financial year 2021. You have to file the form within 30 days from the end of 6 months of the financial year to which such form relates. This form relates to 2021. It ended on 31st March, 6 months, 30th September. Now, 30th September to 30th October, you can file the form anytime. This is students, this is the max limit. You can file it anytime. Whenever it is available on the MCA website, right? Whenever it is available on the MCA website, you can file it anytime after the end of the financial year. That limit is the max limit. Like for income tax returns, you have the max date, the due date. This is the due date. Okay. Fine. So it contains a liabilities and statement of income and expenditure. It contains a declaration. What is the declaration? On the state of solvency of the LLP. Is the LLP doing good? Is it solvent? Are there funds to manage the business? Liabilities and assets in position in compliance with each other? So it is solvency of the LLP by the designated partner. So here comes the designated partners. It is the duty of the designated partner to file this form with the MCA. And how is the duty of the farmer? A person of the partner. Okay, I'll come to that. So shall be filed by every register every year within a period of 30 days from the end of 6 months and to which the statement of solvency relates. Okay. So a person will not come to the designated partner that you have to file. It is a duty of the designated partner. That designated partner has to do what? That designated partner has to file this form of fixing his signatures, digital signatures. All the forms are electronic, digital signatures, right? And also information related to statement of assets and liabilities and statement of income and expenditure. What is it? Statement of assets and liabilities is like the balance sheet. Statement of income and expenditure of the LLP is the profit and loss account. So this is what statement of accounts and solvency. Now here comes the second form. Every LLP would be required to file annual return. What is this annual return? So first form, Form 8, was related to the financial statements, the financials of the LLP. Are they doing good? And the second form is an annual return. It is a compliance form. It is like a form which will ask how many meetings were held, how many number of designated partners are there, how many partners are there, was there a change in the partnership during the year, what was the change. So whatever has happened in the previous year, previous financial year, you have to sum up everything in one form, in one return, and submit it to the MCA. That what is this happened during the previous 1 year within the LLP. So this is that form. In Form 11. So the Form 11 is for annual return. Statement of accounts and solvency is Form 8. And this is Form 11. With ROC within 60 days of closure of financial year, which will be available for public inspection on payment of prescribed fee to the registrar. So within 60 days of closure of financial year, whenever your financial year closes, within 60 days, after 31st March, within 60 days, somebody wants to see what is this particular LLP doing, what is this particular company doing. They can make an account over there, right? Sign up on the MCA website. They can pay the prescribed fee, and whatever is included in the scope of public documents which can be made available to the public for their reference on the payment of a fee, a minimal fee, you can get access to those statements filed with the Ministry of Corporate Affairs. So these two returns are really important in case of LLP, audit of LLPs. So the accounts of every LLP shall be audited in accordance with Rule 24. Rule 24 of LLP Rules 2009. So make sure LLP Act is 2008, but LLP rules are 2009, which provide that any LLP whose turnover does not exceed in a financial year 40 lakh rupees or whose contribution does not exceed 25 lakh rupees, contribution is contribution by the partners, is not required to get its accounts audited. Not required. So up till 40 lakhs of turnover and up till 25, or this is an or over here, not an add. Either of the conditions satisfied, you are not required to get your accounts audited, is not required to get its account audited. However, if the partners of such limited liability partnership decide to get the accounts of such LLP audited, the accounts shall be audited only in accordance with such rules. So it has set up limits. The LLP rules have set up the limits, that these are the limits beyond which if you cross, you have to get your financial statements audited by a chartered accountant. Okay. If you're falling below the limits, it is completely your requirement, is completely your wish whether you want your accounts to be audited or not. You need, from our side, from law's point of view, it is not at all required. But if you wish to get your accounts audited without any legal requirement, the audit has to be done as per these rules only. It doesn't mean that if these rules don't apply to you, you can set out the scope and nature and limitations of audit as a sole proprietor or a partnership firm. No. If you wish to get your accounts audited without any legal requirement, the audit has to be conducted as per these rules only. Otherwise, don't get your accounts audited if you are not eligible or if you are not required. And above this threshold limit, 40 lakh rupees or contribution exceeding 25 lakh rupees, it is mandatory for you to get the accounts of your LLP audited by a chartered accountant. Okay, this was the most important part of an LLP. Powers of the registrar. Again, registrar had the powers to obtain such information, which may consider registrar can anytime can call for any information to see whether the LLP is complying with the provisions of this act. He would also have the power to summon. What is this? Summon is sending a notice to any designated partner or employee of any LLP. So he can summon anyone. Designated partner or employee of any LLP before him for any such purpose in case the information has not been furnished to him or in case the registrar is not satisfied with the information furnished to him. You have filed a return on the MCA website, registrar has got it, he is not satisfied with the information furnished by you. It is in contradiction to what you have filed and what you have filed earlier. So he may ask for it. He may summon anyone, the employee, the partner, the designated partner. Or you have completely forgot to file your returns. Okay, you have not filed your returns. In that case, he'll definitely call you up. Why are you not filing your returns? Why are you not regular in filing your returns? Documents available for public inspection. So, which documents are available for public inspection? Like you can inspect them by paying a fee in person or electronically. Okay, so rupees 50 is the fee for certified copy or any document, and Rupees 5 is per page. Rupees 5 is per page. Okay. So if you want inspection is rupees 50, and if you want any Xerox copy of any document extract, to rupees 5 per page you will have to pay. What are the documents available for inspection? The incorporation document. What is the incorporation document? The charter, only the chart of the LLP, the deed. So the deed has to be filed electronically with the registrar. It is available to any person who can pay his fee and can get this document for his reference. Names of partners and if any changes if made therein. Sure, Jamil, I'll do so. Statement of account and solvency, annual return. Right? Statement of account and solvency, annual return. So these are the documents available for public inspection. Okay? Then default, it has been provided that in case LLPs file relevant documents after their due dates with additional fees up to 3 days, no action for prosecution will be. What is prosecution? What is prosecution? Put behind the bars, case. They can file a case upon you. It has been provided that in case LLPs files relevant documents, even if the due date has passed, you forgot, you were not able to file your return, the government gives you 300 days. Even after that, with their due dates, with additional fees up to 300 days. So within 300 days, you can file those forms by paying additional fee. No action for prosecution will be taken against them. In case there is a delay of 300 days or more, the LLPs will be required to pay normal filing fee, additional fee, and shall also be liable to be prosecuted. So normal filing fee and additional fee was there. It was there in the first part also. But after 300 days, there will be prosecution as well. Right? That also contains provisions for compounding of offenses which are punishable with fine only. The offenses which are punishable with fine only for the offenses for which there is no you cannot sue in that cases, like there is by paying a fine you can be relieved of the punishment by paying a fine. So compounding of those offenses provision is also very helpful. What is compounding of offenses? Can anybody tell me what is compounding of offenses? Anybody, please. What is compounding of offenses? You might have read it in law. Please. Compounding of offenses. I think there are no. Okay. Yes. Yes, Sanjay, completely right. Yes. Compounding of offenses is interchanging of imprisonment with fine. You can pay the fine and prevent yourself from imprisonment. It's not called le de ke, it is not that. It is actually legal, not corruption. It's like you pay it accordingly as per the law and you can be relieved, like you pay it under a bond. So this is compounding of offenses, and this particular provision is there in LLP Act as well. Okay, so now we come to appointment of auditor. The auditor may be appointed by the designated partners of the LLP at any time for the first financial year, but before the end of first financial. So this is your first year of operation. During the first year of operation, you can appoint the auditor anytime during the year. But before the end, you have to appoint him before the end of that particular financial year. After the end of the financial year, no, you have for the first auditor, for the first time. If you're appointing an auditor for the first time, at any time during the financial year, okay? At least 30 days. So first is at any time, at least 30 days prior to the end of each financial year other than the first financial year. So 30 days are left before the end of the financial year. For the financial year to end, 30 days are still there. By that time, you should have appointed your auditor. If it is 31st March, by 1st of March. If it is 31st March, by 1st of March, 28th, 29th of February, anytime during that year, but before the end of the financial year, in the case it is your first year, and if it is recurring, then you have to appoint the auditor 30 days prior to the end of each financial year. To fill the casual vacancy, caused by removal of auditor, you have removed the auditor, you can fill the casual vacancy at that particular time. Or if there is a casual vacancy owing on the reasons because of the auditor on his part, you can fill the casual vacancy. However, the partners may appoint the auditors if the designated partner. This is very important point. This is very, very important point. It has been highlighted in color also. It is the duty of the designated partner. It has been written at top. Designated partners of the LLP have to appoint the auditors. If designated partners have failed to fulfill their responsibility, so the other partners, the normal partners, may appoint the auditors. It is first the duty of the designated partners, right? If designated partners fail to do so, then the normal partners, other partners may appoint the auditors. Why would someone incorporate an LLP when there are penalties for non-compliance, including imprisonment? If they wish to enjoy the benefits of both the corporate form and the partnership form, they have to go for the option. They have to opt for LLP because it gives you lots of benefits and nothing comes free. If it is giving you lots of benefits, you have to comply with the rules and regulations. Okay? The pros overpower the cons. That is why they choose LLP. So this is the appointment of auditor, very important. So advantages, purpose, need of audit, simple. We have read it about it in partnership as well. Detection of errors, disputes, liability, better compliance and management, reconstitution. We have read about it in partnership. Okay. What is the auditor's duty regarding audit of LLP? Engagement letter. Again, the auditor should get definite instructions in the form of an engagement letter. Minutes book. This was there in partnership as well. The points are almost similar like partnership in audit case. LLP agreement. The auditor should read the LLP agreement. In the case of partnership, I told the auditor should read the partnership deed and following provisions. Nature and business of LLP. Amount of capital contributed by each partner. Interest in respect of additional capital. If you are contributing additional capital, what is the rate of interest the LLP is giving? Duration of LLP, drawings, salaries, commission payable to designated partners, borrowing powers of LLP, how much the LLP can borrow with partners due authorization, rights and duties of partners, method of settlement of accounts between partners, any loans advanced by the partners, profit sharing ratio. The auditor should mention, so in his reporting, the auditor should mention whether the records of the firm appeared to be correct and reliable, whether he was able to obtain all information and explanation necessary for his work, whether any restriction was imposed upon him. Normal points, we can learn it straightway. Okay, so that is what an LLP is. So any doubts till now regarding LLP? Please. Any doubts till now? Yes, Srishti, there is a specific reason because they are giving you a very beautiful form of organization, limited liability partnership, where you are enjoying a host of benefits, right? So why do we give exams? Why doesn't the institute give us the degree itself? If we give the exams, because we have to assure them that we are worthy. We are worth for the to be provided with the degree, and we have give exams, we prove our worth. That is why if you are enjoying the benefits of an LLP form or a company form, you have to file the forms. You have to file the statements to so that they could point you out. They could point you out if there is any fraud or anything or or some naughty elements taking the benefit of this particular form of organization which is prevailing in the economy, right? You can do sole proprietorship, you can do partnership. LLP and companies give you a host of benefits. If the government has provided you with this form of organization, so the government wants to keep a check upon you. How are you performing? Are you able to do the business in this particular form of organization, and to check any sham registrations? Most fraud and errors which have been committed in the past, you see, either it is in the form of companies. So keep a control, a check. You have to file such returns. Okay, so let's move ahead. Another topic for us. It's not the fourth topic. We're moving to the local bodies. Can you give me an example of local bodies? Anyone? Example of local bodies. What are local bodies? Waiting for your revert. I'll start with you only after you revert me. You must assure me that you are not sleeping. And you are able to grasp the points. I'm trying to open up every word, every sentence for you so that you get to understand. Wherever there is need of an educational or an understanding video, I'll definitely show you. Right? Please bear with me if I show you some videos in Hindi, because if I find that particular video very interesting, that it should be shown to you and it is available in that language only, please bear with me. Okay? No, Manish, not same. In the first case, you can appoint auditor anytime before the end of the financial year. In the second case, when it is not your first financial year, you have to appoint the auditor prior to 30 days before the end of the financial year. Understand in this manner. If it is the first financial year, I can appoint the auditor anytime till 31st March. But in the second case, when it is not my first financial year, I have to appoint the auditor max by 1st March. Okay? Fine? Manish. Gram Panchayat, Municipal Corporation, Electricity Boards, and Nagar Nigam, Nagar Palika. Okay. Fine. So, meaning and features of local bodies. A municipality can be defined as a unit of a local self-government in an urban area. In an urban area, right? So we are not talking about gram panchayats over here or the panchayats or the zilla parishads. This is in an urban area. So this is a municipality, it is a local body. Gram panchayats are local bodies, zilla parishads are local bodies. But in our case, we are starting with the municipalities. So by the term local self-government, it is ordinarily understood that administration of a locality, a village, a town, a city, or any other smaller area than a state. So central level country, state level is what your state, level below the central level, state level, then below that areas, districts. So we have local self-governments. We have district commissioners in our areas, right? So by a body representing the local inhabitants, possessing fairly large autonomy, raising at least a part. Okay, so Jamil, I'll do it at the end of the lecture or at the start of the next lecture. Okay, I'll definitely go through the module. This is module in itself. This is all the module. Whatever is covered in the presentation, it is the module only. I'll take you to the module as well at the end of the lecture or at the start of the next lecture. What are we doing today? We'll definitely take you to the module. Okay, I've noted your point. Fine. So there is a confusion regarding local bodies by the term local self-government, administration of a locality, right? Municipal government in India covers 5 distinct types. What is it? The urban local authorities. 5 distinct types are the municipal corporations, the municipal councils, notified area committees, town area committees, and the cantonment committees. Okay, these are the 5 municipal governments, types of municipal governments in India. Okay, check out what is yours. Is it a municipal corporation or is it a municipal council or a notified area committee? You will find yourself in municipal corporations or municipal councils. The taxation powers of the corporations are confined to a few items and are of a generally compulsive nature. What do you mean by compulsive nature? It is mandatory. Okay. It is compulsive nature means mandatory, right? So it is a water and sewerage bill you get, right? Property taxes, water and sewerage bills. So this is what you have to pay to your municipal corporations. At the end of the session, I have a video with me, which is a very beautiful and knowledgeable video which tells you about municipal corporations, right? So at the end of the session, students who are interested in watching that video, I'll show you that video. Okay, it will tell you in detail. It is in Hindi, so please bear with me. I found this video really good, but it is in Hindi, so you'll have to bear with me. I'll show you at the end of the session. Okay, you can very well grasp the concepts of municipal corporations. On the other hand, the taxation powers of other types of urban local authorities cover a wider range, optional in nature, and subject to a procedure for their imposition, requiring final sanction of the state governments. So what does it say? It says we have read about 5 types of municipal governments: the municipal corporations, the municipal councils, the notified area committees, the town area committees, and the cantonment committee. So it says in the case of corporations, in the case of municipal corporations, the taxes, what is the source of taxes for any government body, source of revenue for any government body? The taxes. For any government, the major source of revenue for the paisa, for the money, is taxes. They collect taxes and spend it upon people, spend it upon infrastructure, spend it upon giving you the various facilities. So for this purpose, municipal corporations, so the taxes imposed by municipal corporations are compulsive. You have to pay it. Otherwise, you are liable to penalties. And in case of other types of authorities, it is usually optional. If you want to get it from your people living in your area, it has to be sanctioned by the state government. If the state government allows you to collect this much of taxes of any kind of name, ABC, you can collect it only if sanctioned by the state government, if permitted by the state government. Okay. So point number E. Nandini, what are you asking? Priyanka, it's there. You'll understand with the visuals as well. And Jamil, no need to be sorry. I don't. It's no need. I just reiterated what I wanted to tell you. Okay. So property taxes and octroi. What is octroi in Hindi or in regional language? We call it chungi, right? In our regional language. I don't know in your regional language, what do you call it? The octroi. Huh? Property taxes, we all know, right? So these are the major sources of revenue of the municipal authorities. Other municipal taxes are professional tax, non-mechanized vehicles tax, taxes on advertisement, taxes on animals and boats, tolls, show tax, etc. Depends upon local body to local body. What kind of taxes are they collecting? Municipal authorities are endowed with specific local functions, regulatory, maintenance, and development activities. So, if you want to get a road built in your area, a road repaired in your area, that is maintenance, right? That is maintenance. If you want a road to be built in your area, that is development. We are building roads. The municipal, the MCs of your area say we are building roads. We have made the road, like we have get the tiles laid on the road, something like this. That is development activities, maintenance activities. Proper sewerages are there. Proper pipelines for the transportation of water, right, is there. The transportation of sewage is there. Regulatory is what? Like the licenses. If you want to construct your house, you have to get your house map approved by your municipal authority. This is regulatory. If you want to open a shop, you have to get a license from the local authority. If you want to open a restaurant or food eating joint, anything you want to, you have to get your map approved. You have to get certain clearances from your local authorities. That is regulatory. So are we clear with the regulatory aspect of municipal authorities, the maintenance and the developmental activities, right? Okay. Jamil, in your language, it is called Zakat Naka. Ha, Naka. Octroi in Hindi is Naka. In Punjabi, we call it Chungi. In Hindi, it is Naka. And Jamil is saying Zakat Naka. Okay. Whatever it is in your language, you might know it. So municipal authorities' functions are regulatory, maintenance, and development. Expenditure incurred by the municipalities and corporations can be classified under general expenses, general administration and revenue collection, public health, district hospitals, your district hospitals, right? You might have seen a huge rush in district hospitals during this corona time because the corona vaccines are available in the district hospitals only, like district municipal hospitals, your DMHs, district civil hospital, right? Public safety, see the, you can say the street lights and all, okay? Education, public works, and others such as interest payments, etc. So this is where municipalities expend, right? This is where municipalities expend, right? So these are the features of local bodies. So what are the types of grants received by local bodies? General purpose grants. General purpose, you can use it for any purpose which is within your powers. So these are the grants received from state or center. Usually they are received grants from the state. These are general purpose grants are primarily intended to substantially bridge the gap between the needs and resources of the local bodies. Their budget requires that they need 20 crores for this particular year or for this particular project. And they are, from the taxes they have collected and other fees they have collected, they are short of 2 crores. They have collected only 18 crores. So usually the state's authorities give them grants. And if there is general purpose grant, you can use it to meet your expenditure, general expenses, which are within your normal powers and duties. Specific purpose grants, obviously given for specific purpose, you have to get constructed an MRI center in your district hospital, and you are being given a building grant or a grant by the name of center to construct that particular center over there. You cannot use it for general purposes. You have to use it for that particular purpose only, right? Statutory and compensatory grants. These grants under various enactments given to local bodies as compensation on account of loss of any revenue, on taking over tax by state government or local. Till now, a particular tax was being collected by the municipal authorities. They were getting revenue from this tax. But now this tax has been taken over by the state government. There is a loss to the local government. And thus, to compensate that loss, state governments give that grant. you can definitely relate it to the GST. The Cgst Compensation Act. Some taxes were being collected by the state. Now under GST, the share is being taken by the center. The states were at loss of indirect taxes collection. So to compensate the states for that particular collection, for that particular amount which they were getting before the implementation of GST, the government came forward with the GST Act for compensating to the states for the loss they have occurred, because some of the tax portion has been taken over by the center. Now that particular revenue is going to the center. There is proper demarcation of center, state, and local bodies. Nandini, it's fine. I'll tell you, please be here with me after the session. When I ask you, just ask me this doubt. I'll definitely clear you, right? It just breaks the flow if I tell you. I will definitely tell you. Okay? Don't be sorry. Sorry, guys. Why are you being sorry for this? It's completely fine. Okay, so general purpose grant, specific purpose grant, and statutory and compensatory grants. Financial administration. So the financial part, how do they administer the municipal councils, the corporations, the local bodies? There is budgetary procedure. You have to prepare the budgets, then expenditure control, then accounting system, right? Budgetary procedure. What is budget? How much funds do you need? How much do you expect that you will be getting the funds through local taxes, local fees, license fee, and etc. So the main objective for the budgetary procedure is to ensure, what is to ensure? That funds are raised and monies are spent by the executive departments in accordance with the rules and regulations. If a particular project requires that 10 lakhs has been sanctioned, and if that particular project got completed in 9,50,000, so those 50,000 are coming back to the municipal funds, not going to someone's private pocket. So within the limits of sanction, if 10 lakhs have been sanctioned and 11 lakhs have been expended without getting the permission for extra sanction, so this is what budgetary procedure is required for. To keep a check on the expenses of the municipal councils. Budget preparation is usually the occasion for determining the levels of taxation, right? The levels of taxation and rates and the ceilings on expenditure, right? So municipal, what kind of taxes, what is the level of taxation you want? You are getting short of funds, the local bodies will introduce a new tax. Municipal budget formats and heads of accounts vary from state to state. There are variations between the corporation and municipalities. Budgetary format is different. They differ from organization to organization. They can differ from state to state and corporation and municipalities as well. So this is what we require. This is what we want to expend. We are short of this. Suppose you want to apply to the state. Sir, this is our budget. We expect to collect this much of revenue from taxes and fees. This is what we plan to expend. So we are short of this much money. We request you to give us general purpose grant. So you have to present it in the form of a format, right? Then there is no strict separation between revenue and capital items. Usually there is a head called extraordinary items, which covers most of the capital transactions. So there is no distinction between revenue and capital. Whatever you require the funds for a capital expenditure, for revenue expenditure, it is like, what is it like? It is like a receipts and payment account, right? Even for capital transaction, you just put it extraordinary items. Most of the extraordinary items cover the capital transactions. A number of special funds, example, roads. In some cases, like for education, you want to form district school, water supply, sanitation, etc. are there. They find a place over there. Okay. So this is what is there. Okay. So this is the budgetary format. You have to control the expenditure. I'll come to your doubts, Srishti. You have to control the expenditure as well. in the system of financial control existing in the state and central government level, there is a clear demarcation between the legislature and the executive. So a particular level of government frames the rules, a particular level of government executes those rules, and a third independent entity checks those execution. At the local level, municipal bodies framing the rules, and it itself is executing the rules. So there is no demarcation. The same person who has framed the rules, the same person is enforcing the rules and executing the powers. The integration of legislation and execution in municipal council makes it difficult for its executive to function as its inquisitorial body as well. Inquisitorial means under some, as a standalone body. It is itself framing the rules, the laws, and it itself has to execute it and keep a check on it. So moreover, the separation of executive powers and functions in municipal government cannot accommodate the existence of an independent finance officer responsible to the municipal council. So they cannot go for such posts. There is a finance officer, there is something else. No. The municipal corporation, the bodies, the elected representatives are the government, local government in itself. So the state government, whenever it requires, had to get it audited externally. They have to get it audited externally to control the expenditure. It is known as revenue audit. It is known as revenue audit or the expenditure audit. Matters of regular revenues expenditures are generally delegated to executives like municipal commissioners. So what we call the MC of our area. The MC of our area. So we always approach the MC of our area. Sir, look at the condition of our roads in our area. Get laid the interlock tiles. Please get it repaired. In the times of rains, monsoon, your streets get flooded with water. You approach the municipal commissioner. Prashasan, देखिए प्रशासन क्या कर रहा है. न गलियों में बाढ़ आ गई. What is that? That is only you have to approach your local body. Please get it rectified, get it improved. We pay you taxes, we pay you local taxes for this purpose only. The roads should be repaired. There should be street light everywhere for public safety, safety of women. Everything is your duty. Night, while traveling during night, right? For improvement of the infrastructure, it is your duty at the local level. So you approach your municipal commissioner because every MC is allotted a particular fund portion for the development and the maintenance of his particular area. Accounting systems, local bodies follow cash system of accounting. Right? I hope you know the difference between cash and accrual system. So local bodies follow cash system of accounting. So objectives, again the same, reporting on fairness of the content and presentation, the strengths and weaknesses of the system of financial control, reporting on adherence to legal and administrative requirements, that the revenue is being collected and the expenditure is being made as per the legal requirement. Whether the money being received is fully spent, or detection and prevention of error, fraud, and misuse of resources. Okay. I'll come to it, Srishti. When it comes to central and state level bodies, the law enacting bodies are the parliament. The parliament enact the laws in case of center. The state legislative assembly enacts the laws in the case of states. But the bureaucracy, right? The bureaucrats, the IAS officers, the IRS officers, these are the persons who are given the duty to implement that particular law. So the person framing the law, the entity framing the law, and the persons who are executing the law are different. So the person framing the law can keep a check upon the persons executing what is there in the law, implementing the law. So there is a demarcation, right? But in the case of municipal authorities, they themselves are the persons who enact that law, who get that law prepared, framed, and they are the persons who have to implement the law. There is no demarcation. So, right? So there needs to be proper check and control over there. They don't have separate officers for that purpose. They are the persons who have to implement the law framed by them. This is what the expenditure control point wanted to convey. I hope Srishti, it is clear. Abhishek, who keeps the eye on utilization of specific funds, the municipal bodies are required to submit returns forms to their respective state authorities with proper, documents, evidences. And the state people, officers from the state, they might visit anytime, surprise visits, and they can ask for reports. How has the fund been utilized? So in this way, an eye is kept, a check is kept on the utilization of funds. Right, Abhishek? Yes, Srishti. These have not been subsumed in GST. Local bodies have been given that autonomy that you can collect these taxes. They haven't been subsumed in GST. You are right. I gave GST just as an example. Don't relate GST to local bodies. GST was given as an example just to explain you the concept of compensation, the compensatory grants. Okay. I hope Abhijit, Srishti, you are clear. Okay. So we reached the last point in case of local bodies. Audit program for local bodies. You have been given. You have been assigned the audit, you got an audit of your local body, right? So what should be the audit program? Very important part. Appointment. So first is the appointment. The external control of municipal expenditure is exercised by the state governments. So who keeps a check on municipal corporations and local bodies? State governments. Right? They have their different departments and committees who keep a check through the appointment of auditors to examine municipal accounts on record. On record, what are the accounts saying? So auditors are appointed by state government. However, the municipal corporations of Delhi, Mumbai, and a few others have powers to appoint their own auditors for regular external audit. What is external audit? External audit is one which is carried out by a third independent party. They're like the statutory audits. Internal audit is what? It is on assignment basis given to a professional who submits you monthly report. Right? So we are talking about external audit over here. So in the case of Delhi, Mumbai, and a few other metros, the municipal bodies, the local bodies have the powers with them only to appoint the auditors for their external audit function. But in all other cases, except from these few cases, the state governments appoint external auditors to audit the accounts of local bodies. Okay. What are the auditors' areas? Auditors' areas are the fairness of the contents and presentation of financial statements, whether they have been presented fairly. It could be arithmetic errors or logical errors. You have to check for that. The strengths and weaknesses, we have done it. The advantages of audit, the same. Adherence to legal, what we have done over here. See, objectives of audit of local bodies, right? It's the same over here. His objective should be to detect errors and fraud and misuse of resources. A grant was received or a fund was issued in the name of the municipal commissioner of your area to get a road constructed, to get a road repaired, to get installed and fitted street lights in your area. 2 years down the line, 3 years down the line, nothing happened. Where did the money go? It has been shown over there in the accounts that it has been expended. See, we have constructed district toilets. this much money was expended. When the auditor visits, where are the toilets? Like we can see open field, where are the toilets? You said you constructed district toilets. So where are the toilets? You constructed it in the air, or the storm took away it? So this is what? This is embezzlement. This is fraud. Or there is misuse of resources. A particular grant or fund was received for a particular work and it is used somewhere else. Misuse of resources, right? Rules and regulations. Auditors should ensure that expenditure incurred conforms to the relevant provisions of the law and is in accordance with the financial, whatever law is applicable on that particular municipal corporation, their local law. Every expenditure is being made as per that particular law. Very important point, authorizations. He should ensure that all types of sanctions, sanction is what? Permissions, either special or general, have been accorded by the competent authority. If a fund has been sanctioned, a permission has been sanctioned, it has been accorded by the competent authority under the authority's signature and seal. That if this particular expenditure or this particular event required some sanction, whether it has been sanctioned and what was the limit of the sanction for this particular event, whether the expenditure has crossed the limit. For example, I can give you during your university fest, right? For your university fest, your colleges get grants from the university. Whatever universities your college affiliated to, your college gets grant from the university. And the university sanctions them the limit up to 30,000 for this event, up to 2 lakhs for this event. After the event has taken place, your college sets out a form, a detailed form setting out these were the receipts from the students, from advertisement, these were the expenditure. Please grant us this much of money. We expended this. This we expended out of our own pocket. So that is what authorization. University authorizes. This is the limit till which you can expend money for this particular event. So even in this case, you have to make sure that you have proper, the municipal bodies had proper permission, sanctions from the state government, and the funds have been expended accordingly. Provisioning, he should ensure that there is a provision of funds and expenditure is incurred from the provision, and the same has been authorized by the company. If you have made a provision for some expense, expend funds from that provision only. Reduce that provision that you have expended. You are making a provision. You have made a provision for some event and you are expending funds out of some other funds also. Use that provision in books to spend out the money, to expend the money, right? Budgeted performance, very important point. The auditor should check what was the budget which was sent to the state government, laid before the state government. This is the budget. We want to expend this much of money. What is the variation from the budget expenditure? What is the variation from the budget receipts? If the variation is not up to a tolerable level, if it is up to a tolerable level, it is completely fine. If it crosses, it is intolerant, the variation is quite high, you have to go for it. You have to ask for it. So the auditor should check that the different schemes, programs, and projects where large financial expenditure has been incurred are running economically. Unutilized, or the expenditure, unrequired expenditure is not being made economically and you are getting the expected results. What was the need of this expenditure if you're not getting the expected result? You have constructed a school for the local children and the roof is leaking. So what is the need of that if the roof is leaking? Right? If the roof is leaking, what is the need of that? So if you have been given funds to construct that particular school, it is automatic that you have to construct something good, like it should be strong. Children are not coming to study, students are not coming to study. You are not getting the expected results. So why did you spend the money over here? If you wanted to expend the money, it should be utilized properly, quality use. So this is what budgeted performance is, right? So audit program for local bodies, appointment, auditors areas, rules and regulations, authorizations, provisioning, and budgeting. So this was what was for local bodies. I'll come to your questions, then I'll show you the video. Okay. So Srishi asking, internal audit is also carried out beside external audit for local authorities. It depends. No, not Sanjay. No, not CAG. Not CAG. Usually not CAG. Yes, Srishti, internal audit can be carried out by anyone. Even if I'm having a business, I want to get an internal audit carried out, I can always engage a professional. Please visit me twice, thrice, or 15 days a month, and please audit my accounts internally. Because for internal audit, it is in our hands. We set out the scope, right? Whatever is to be audited, whatever is not to be audited. If I want only my systems to be audited, information systems audit, the auditor would come and audit my systems only. He'll test my system controls only. He'll not check anything else. So internal audit is completely our prerogative. It is completely under our control. But external audit is usually statutory. It is usually under some law. It is usually the auditor is usually appointed by some higher hierarchical authority higher in hierarchy to you. Okay. So till the time I'm showing you guys the video, it is 6 to 7 minutes video. You students can type in your doubts over here. Yes, Mr. Arihan. Yes. HUF is like individual only. So tax audit applications, the provisions applicable to individuals are applicable to HUF. You can read it in the income tax. So whatever provisions are applicable to individual, applicable to HUF as well. Okay, so this video is very long. It includes the Gram Panchayats and the Parishads also. So I'll be skipping that part in between. Okay, fine. Till the time, people who wanted to watch the video, please bear with me. Someone asked me, sir, I don't understand Hindi. It is in Hindi, but with the video, you can definitely get to know whatever they are trying to tell you, because video, it is written over there. It has words, it's in the video also, right? Written words over there. You can share your doubts over here. If not today, I'll definitely discuss it in the next class, right?
जैसे कि हमें पता है कि इंडिया में ड्यूअल गवर्नमेंट सिस्टम है एंड सेंट्रल गवर्नमेंट और स्टेट गवर्नमेंट जिनमें डिफरेंट सब्जेक्ट्स बटी हुई हैं, दोनों गवर्नमेंट्स उसके अकॉर्डिंग लॉज बनाती हैं और उसको स्टेट्स में इम्प्लीमेंट करती हैं, जैसे स्कूल्स, हॉस्पिटल्स, पब्लिक ट्रांसपोर्ट्स लाइक रेलवेज, एयरपोर्ट्स, हाईवेज, रोड सेफ्टी रूल्स एट्सेट्रा। इन सब चीज़ों से रिलेटेड लॉज बनाती हैं। लेकिन इनके अलावा कुछ लोकल इश्यूज़ ऐसे होते हैं जो सरकार तक पहुंच नहीं पाते हैं। ये इश्यूज़ हर एरिया के अलग अलग हो सकते हैं, जैसे कहीं पे वाटर सप्लाई की दिक्कत हो, कहीं पे ड्रेनेज सीवर की दिक्कत हो, तो कहीं लोकल रोड्स, स्ट्रीट लाइट्स या फिर साफ सफाई की प्रॉब्लम हो। तो इन टाइप के लोकल इश्यूज़ को एड्रेस करने के लिए होती है लोकल गवर्नमेंट। वैसे आप में से कितने लोग अपने एरिया की लोकल गवर्नमेंट के बारे में जानते हैं? तो हेलो गाइज, आप देख रहे हैं बेसिक ज्ञान और आज की वीडियो में हम बात करने वाले हैं लोकल गवर्नमेंट के बारे में। लोकल गवर्नमेंट का मेन मोटिव है पॉलिटिकल डिसेंट्रलाइजेशन ऑफ पावर, यानी पावर को अलग अलग लोगों में या ऑर्गेनाइजेशंस में बांटना, यानी जो पावर सेंट्रल गवर्नमेंट के हाथ में है आगे लोकल गवर्नमेंट्स में डेलीगेट करना। एंड डायरेक्ट डेमोक्रेसी, ऐसी डेमोक्रेसी जिसमें लोग डायरेक्टली खुद ही अपने लिए पॉलिसीज यानी नीतियां बनाते हैं। लोकल गवर्नमेंट मेनली दो टाइप की होती हैं, पंचायती राज जो रूरल यानी ग्रामीण इलाकों में होती है, और म्यूनिसिपैलिटीज जो कि डेवलप्ड अर्बन यानी शहरी इलाकों में होता है। दोनों का ही काम लोकल गवर्नमेंट के रूप में होता है। मेनली इसमें दो काम आते हैं। एक तो यही कि लोकल इश्यूज जैसे बिजली, पानी, रोड, साफ सफाई एक्सेट्रा से रिलेटेड इशू पे समाधान निकालना, और दूसरा सेंट्रल और स्टेट गवर्नमेंट द्वारा बनाई गई पॉलिसीज को लोकल एरियाज में इंप्लीमेंट करना। इसलिए लोकल गवर्नमेंट को ग्रास रूट लेवल गवर्नमेंट भी कहा जाता है, क्योंकि ये ग्रास रूट लेवल पे काम करती हैं, यानी लोगों की इमीडिएट जरूरतों पे एक्शन लेती है। लोकल गवर्नमेंट को इंडियन कॉन्स्टिट्यूशन के स्केड्यूल्स में शेड्यूल नंबर 7 जिसमें यूनियन लिस्ट करना। ये तो हो गया पीसीआई पंचायती राज इंस्टीट्यूशन का स्ट्रक्चर, जिसमें 3 टायर्स होते हैं, जिला लेवल जिला परिषद, ब्लॉक लेवल पंचायत समिति, विलेज लेवल ग्राम सभा। अब स्टेट वाइज हम ये लिस्ट देख सकते हैं कि इन तीनों लेवल्स पर स्टेट में कितने मेंबर्स होते हैं। जिस टाइप से हमने अभी रूरल एरियाज यानी ग्रामीण इलाकों की लोकल गवर्नमेंट पीसीआई पंचायती राज इंस्टीट्यूशन को समझा, इसी प्रकार से अर्बन एरियाज यानी शहरी इलाकों में जो लोकल गवर्नमेंट होती है उन्हें कहते हैं म्युनिसिपैलिटीज। म्युनिसिपैलिटीज को कॉन्स्टिट्यूशन में जगह मिली 1992 में 74th कॉन्स्टिट्यूशनल अमेंडमेंट एक्ट से। कॉन्स्टिट्यूशनल अमेंडमेंट एक्ट के बाद अब हर स्टेट का म्युनिसिपैलिटीज बनाना कंपलसरी हो गया। म्युनिसिपैलिटीज बेसिकली 3 टाइप की होती हैं। नगर पंचायत उन एरियाज के लिए जो ट्रांजिशन स्टेट में होते हैं, गांव से शहर की ट्रांजिशन। म्युनिसिपल काउंसिल ये होते हैं छोटे शहरों के लिए। म्युनिसिपल कॉरपोरेशन बड़े शहरों के लिए जैसे मुंबई, दिल्ली एटसेट्रा। म्युनिसिपैलिटीज के नामों में बड़ी कंफ्यूजन रहती है, बिकॉज एक ही चीज को कई अलग अलग नामों से बुलाया जाता है और सारे सिमिलर से होते हैं। जैसे नगर पंचायत को सिटी काउंसिल और नगर परिषद भी कहा जाता है। इसी टाइप से म्युनिसिपल काउंसिल को नगर पालिका या नगर पालिका परिषद भी कहा जाता है, और म्युनिसिपल कॉर्पोरेशन को महानगर पालिका या नगर निगम के नाम से जाना जाता है। स्ट्रक्चर एंड वर्किंग ऑफ म्युनिसिपैलिटीज। म्युनिसिपैलिटीज 2 पार्ट में डिवाइडेड होती हैं, लेजिस्लेटिव पार्ट और एग्जीक्यूटिव पार्ट। लेजिस्लेटिव पार्ट्स में आते हैं इलेक्टेड मेंबर्स काउंसिलर्स यानी पार्षद और उनके हेड जिसे कहते हैं मेयर। इसके अलावा नॉमिनेटेड मेंबर्स भी होते हैं जिन्हें स्टेट स्पेशल नॉलेज और एक्सपीरियंस के बेस पे म्युनिसिपैलिटी में सीट दे सकते हैं, लेकिन ये मेंबर्स सिर्फ डिस्कशन कर सकते हैं, डिसीजन मेकिंग में वोट देने का अधिकार इन्हें नहीं होता है। इलेक्टेड मेंबर्स को इलेक्ट करने के लिए सिटी को कई सारे वार्ड्स में डिवाइड कर दिया जाता है जिन्हें हम कॉन्स्टिट्यूएंसी भी कहते हैं। हर वार्ड में उस वार्ड के एलिजिबल वोटर्स वोटिंग के थ्रू वार्ड काउंसिलर को इलेक्ट करते हैं, जिसे हम पार्षद भी कहते हैं। डिफरेंट वार्ड काउंसिलर को मिला के बनती है एक वार्ड कमेटी। हर वार्ड काउंसिलर कमेटी में अपने वार्ड यानी एरिया का रिप्रेजेंटेटिव होता है, और वार्ड्स कमेटी को मिला के बनती है म्युनिसिपैलिटी। अब म्युनिसिपैलिटी के मेंबर्स यानी काउंसिलर मिलके अपना एक हेड इलेक्ट करते हैं जिसे कहते हैं मेयर। मेयर सिटी के फर्स्ट सिटीजन भी कहलाते हैं। जनरली मेयर एक ऑनररी पोस्ट होती है, लेकिन कुछ स्टेट्स में उन्हें एग्जीक्यूटिव पावर्स भी दी गई हैं। दूसरा पार्ट आता है एग्जीक्यूटिव, जिसमें आते हैं म्युनिसिपल कमिश्नर और अदर एडमिनिस्ट्रेटिव स्टाफ जैसे म्युनिसिपल ऑफिसर्स। म्युनिसिपल कमिश्नर म्युनिसिपल कॉर्पोरेशन में जनरली एक बड़े आईएएस ऑफिसर होते हैं। बाकी म्युनिसिपल काउंसिल और नगर पंचायत में ये जूनियर एडमिनिस्ट्रेटिव ऑफिसर भी हो सकते हैं। म्युनिसिपल कमिश्नर को स्टेट गवर्नमेंट द्वारा इलेक्ट किया जाता है। वर्किंग ऑफ म्युनिसिपैलिटी। लेजिस्लेटिव पार्ट यानी वार्ड काउंसिलर की मेयर की प्रेजेंस में मीटिंग होती है। एक बजट बनाया जाता है, उसके अकॉर्डिंग मनी स्पेंड किया जाता है। काउंसिलर्स कमेटी में डिसाइड करते हैं कि सिटी में क्या क्या काम किए जाने हैं। लोग अपने अपने एरिया के इश्यूज और प्रॉब्लम्स अपने वार्ड काउंसिलर यानी पार्षद के सामने रख सकते हैं। फिर वो वार्ड काउंसिलर काउंसिलर कमिटीज में अपने अपने वार्ड की डिमांड को रखते हैं। फिर सारे काउंसिलर डिस्कशन करके वोटिंग के थ्रू फाइनल डिसीजन ले सकते हैं। म्युनिसिपैलिटी जिन जिन सब्जेक्ट्स पे डिसीजन ले सकते हैं वो शेड्यूल नंबर 12 में मेंशन है, जिनमें आते हैं रोड, वाटर सप्लाई, पब्लिक हेल्थ सैनिटेशन एटसेट्रा। बेसिक नीड्स के ऊपर 18 टॉपिक्स। काउंसिलर्स कमिटीज अब जो डिसीजन ले लेते हैं उनको इंप्लीमेंट करने का काम होता है एग्जीक्यूटिव्स का यानी इलेक्शन कमिश्नर्स का। इलेक्शन कमिश्नर अपनी पावर्स को एक्सरसाइज करके और अपने अंडर आने वाले स्टाफ का यूज करके इन डिसीजंस पे एक्शन लेते हैं और उन्हें लागू करते हैं। काउंसिलर्स यानी पार्षद की एक और जिम्मेदारी होती है एडमिनिस्ट्रेटिव स्टाफ के एक्शंस पर नजर रखना कि जो डिसीजन कमेटी में लिए गए थे उन पे ठीक ठाक से काम हो रहा है या नहीं, और अगर उन्हें काम सही नहीं लगता है तो इसकी कंप्लेन वो इलेक्शन कमिश्नर को कर सकते हैं। और इलेक्शन कमिश्नर भी अगर सही से काम नहीं कर रहा है तो वो उस बात को म्युनिसिपैलिटी मीटिंग में उठा सकते हैं। अब बात करते हैं इन दोनों लोकल गवर्नमेंट के फाइनेंस, इलेक्शन, रिजर्वेशन और टेन्योर की। इन लोकल गवर्नमेंट्स को वो चाहे पंचायती राज इंस्टीट्यूशन हो या म्युनिसिपैलिटीज, इनके पास पैसा कहाँ से आएगा ये डिसाइड करती है फाइनेंस कमीशन। पीसीआई का मेन सोर्स ऑफ इनकम है स्टेट या
I suppose that was enough. Right? I suppose that was enough to know about local bodies, the structure of local bodies and how do they What is the hierarchy, the central government, state government, and the local bodies? So, yes, Srishti, can you please rewrite your doubt? I'm not able to get it, what you have written. And expenditure control, yes, Nandini, I'll definitely tell you about it again. I'll tell you everyone, I'll explain everyone expenditure control again in the next class. So here we go. This was our chapter from the module. You wanted me to take up from the module also? See, audit of local bodies. We have covered everything. This is for your knowledge, for your reading. Everything is bulleted and numbered properly in the module. Whatever we have read in the presentation, the general purpose grants, specific grants, statutory and compensatory grants, financial administration, we read about the budgetary procedure. In the presentation, it is all given in the form of points and bullets. Expenditure control, some of the people are having doubts. I'll explain in the next class again. Accounting system, objectives of audit, we've done it. Audit program. Okay. So we have covered everything from the module. Coming to sole proprietorship, partnership, and your, see, this is sole proprietorship, sole trader. Appointment, and we have done audit of firm, appointment of auditors, matters to be considered before starting audit, advantages of audit of a partnership firm, matters which should be specifically considered in audit. We've done everything. Basics of limited liability partnership, we have done it in the form of points. Audit of accounts, advantages and purposes, returns to be maintained, right? Okay. So somebody asked me, sir, it is in the LLP Act, it has been mentioned that end of 6 months. Here you go. Form 8, which shall be filed within a period of 30 days from the end of 6 months. The financial year to which the statement of account and solvency relates. Powers of the registrar, default, appointment of auditor, auditor's duty. We have done each and every point. Specific slide for each and every topic. An action of local. Jamil, I hope it is clear. Whatever I have covered from the module, I've shown you over here. Can you please reply? This is what we have covered from the module. If there is anything else you require, please let me know. Srishti, an action of local authority, if it is beyond legal authority, can result in surcharge by audit. Definitely, auditor then point it out. The auditor can point it out that this particular authority, local authority, has exceeded its powers. Right? What do we say? Ultra vires the authority. We say that ultra vires the authority of that particular municipal body officer. It is beyond their legal authority to venture into that particular action or power. So the auditor can definitely point it out. It is not an audit of the financials also. It is an audit of their powers as also. Right, Srishti? Nandini, they'll come out with the form and then you can fill the examination form. After the result of July session, the institute will come out with the examination form. You can fill the form and then that's it. Okay, so can we wind up? No other doubts? Srishti, is it clear? Any other doubts? I'm keeping the session, the doubts query session open. You can put it over there and I'll take up in the next class. Okay. So we'll meet day after tomorrow on 6th of August and we'll start with government audit. So I'll suggest you guys, you students, to please go through that particular topic from your module as well, just to start, right? Okay, take care everyone. Good night.